Have you ever wondered how the United States Securities and Exchange Commission, the overseer of our financial markets, came into existence? The story begins in the early 30s. America was in the throes of the Great Depression, the worst economic downturn in the history of the industrialized world. The stock market crash of 1929 had wiped out millions of investors, and trust in the financial markets had plummeted. As the country sought to pull itself out of this economic abyss, it became clear that a new approach was needed. The financial markets had been like the Wild West, unregulated and fraught with danger. There was a desperate need for transparency, for rules, and for a watchdog to enforce them. Enter the United States Congress. In 1933, they passed the Securities Act, the first federal legislation to regulate the sale of securities. But it was the following year, in 1934, when the real change occurred. Congress passed the Securities Exchange Act, and with it, established the United States Securities and Exchange Commission, or the SEC as we know it today. But what was the intention behind the creation of the SEC? Primarily, it was to restore investor confidence in the financial markets. The SEC was given the power to regulate and oversee the securities industry, including the ability to bring enforcement actions against companies for fraudulent practices. Their aim? To ensure that companies were transparent in their financial reporting, and that trading in the markets was fair and honest. The SEC was a beacon of hope in a financially tumultuous time. It stood as a symbol of a new era, an era where the financial markets would be regulated, where transparency would be the norm, and where the rights of investors would be protected. The birth of the United States Securities and Exchange Commission, or the SEC in the early 1930s, sprang from an era of economic turmoil. It was a time when the country was grappling with the aftermath of the Great Depression, and the government was determined to restore faith in the economic system. The SEC was tasked with the monumental job of enforcing new securities laws that were meant to regulate Wall Street and protect investors from fraudulent practices. But as you might imagine, these new regulations weren't exactly welcomed with open arms. Wall Street, long accustomed to operating with little to no oversight, resisted these changes. There was pushback, there was resistance, and there were countless obstacles that the SEC had to navigate through. And then, there were the individuals at the helm, tasked with steering this new commission through stormy waters. One such figure was Joseph Kennedy, the first chairman of the SEC. An astute businessman and financier himself, Kennedy was a controversial choice. Critics questioned the wisdom of appointing a Wall Street insider to regulate Wall Street. But it was Kennedy who famously said, "It takes a thief to catch a thief." And he used his insider knowledge to help shape the SEC's early enforcement policies. The challenges were immense, but so was the resolve of the SEC. It was a commission born out of necessity, out of a desire to ensure that the financial catastrophes of the past were not repeated. And so, despite the hurdles, the SEC stood firm. It pushed forward, determined to protect investors, maintain fair markets, and ensure transparency in the financial world. The road was hard, and the journey was long. There were setbacks, yes, but there were also victories. And through it all, the SEC remained steadfast in its mission, unfaltering in its commitment to the public trust. The early years were a test of resilience, a dedication of those who believed in the importance of financial integrity. The 40s through the 80s marked a significant period of transformation for the SEC. As the financial market expanded and became more complex, the SEC had to adapt, making critical changes to its policies and operations to keep up with the evolving landscape. In the 40s, the SEC took on a more proactive role in regulating the securities industry, focusing on preventing fraudulent activities and ensuring investor protection. As the nation recovered from the Great Depression, the SEC played a crucial part in restoring investor confidence and promoting economic growth. The 50s and 60s saw the SEC expanding its regulatory reach. The organization started to pay attention to corporate disclosures, making sure companies provide accurate and complete information to investors. The SEC's focus on transparency and accountability played a significant role in shaping the modern financial market. However, it was in the 70s that the SEC underwent one of its most significant transformations. The Securities Act amendments of 1975, often referred to as the 75 Amendments, were introduced. They gave the SEC broader authority over all aspects of the securities industry, including exchanges, brokers, and dealers. The 75 amendments also led to the creation of the national market system, which promoted efficiency, competition, and transparency in the securities market. Around the same time, the SEC also started to embrace technology. The advent of computers and the internet in the 70s and 80s opened up new possibilities for the SEC. The organization began to leverage these technologies to improve its operations, from monitoring market activities to processing large amounts of data. Technology not only made the SEC more efficient, but also more effective in fulfilling its mission. From the proactive regulations of the 40s to the technological advancements of the 80s, the SEC has shown an impressive ability to adapt and evolve. This ability has been crucial in its efforts to maintain a fair and efficient securities market, protect investors, and facilitate capital formation. The SEC we know today is the result of years of transformation and growth. This modern SEC is a dynamo, a powerhouse of regulatory oversight that serves as the watchful guardian of the United States financial markets. It's a far cry from its humble beginnings in the aftermath of the Great Depression. In its current incarnation, the SEC operates with 5 commissioners at the helm, appointed by the President and approved by the Senate. There's a chairman, and no more than 3 commissioners can belong to the same political party, ensuring a balance of perspectives. This structure encourages fairness, a key principle in the Commission's operations. The SEC's functions are as diverse as they are crucial. It oversees securities exchanges, brokers, dealers, and investment advisors, ensuring that these entities play by the rules. The Commission also regulates new financial instruments, keeping pace with the ever-evolving financial market. This includes the exciting, albeit controversial world of cryptocurrencies and other digital assets. One of the SEC's most significant responsibilities is the enforcement of reporting requirements for public companies. These companies must disclose meaningful financial and other information to the public, providing a common pool of knowledge for investors to use to judge for themselves whether to buy, sell, or hold a particular security. The purpose of such disclosure is to prevent fraud and insider trading, practices that undermine the integrity of the markets. The SEC also plays a pivotal role in overseeing major securities exchanges such as the New York Stock Exchange and the Nasdaq. These exchanges are hotbeds of financial activity, and the SEC's oversight ensures they operate transparently and fairly. But the modern SEC is not just about regulation and enforcement, it's also about education. The Commission provides a wealth of resources to help investors understand the complexities of the financial markets, promoting informed investment decisions. The modern SEC remains a vital institution, safeguarding the integrity of our financial markets. Its ongoing mission is to protect investors, maintain fair, orderly, and efficient markets, and facilitate capital formation. And so, the watchful guardian stands, ready to face whatever the future of finance might bring. Let's delve into some of the most significant cases that have made headlines, notably the Enron scandal and the 2008 financial crisis. These cases not only changed the operations of the SEC but also underscored its vital role in holding corporations accountable and safeguarding investors. Firstly, let's talk about the Enron scandal. In the early 2000s, Enron, a Houston-based energy company, was considered one of America's most innovative companies. However, beneath the surface, it was a different story. Enron had been using accounting loopholes and special-purpose entities to hide debt and inflate profits. When this came to light, it led to one of the most infamous bankruptcies in American history. The SEC played a pivotal role in unveiling this massive corporate fraud. Following the Enron scandal, the SEC's enforcement powers were significantly enhanced by the Sarbanes-Oxley Act of 2002, which was designed to improve corporate governance and accountability. Another significant case that tested the SEC's mettle was the 2008 financial crisis. It was a time of economic turmoil, with big financial institutions teetering on the brink of collapse. The crisis was largely due to the reckless lending practices of these institutions, particularly in the subprime mortgage market. The SEC was criticized for its perceived failure to prevent the crisis. However, it did play a crucial role in its aftermath. The SEC undertook a series of enforcement actions against the financial institutions involved, resulting in substantial penalties and reforms. The crisis led to a major overhaul of the SEC's regulatory framework and prompted the enactment of the Dodd-Frank Wall Street Reform and Consumer Protection Act in 2010. The SEC's involvement in these cases has had a profound impact on its operations. In the wake of the Enron scandal and the financial crisis, The SEC has become more proactive and vigilant in its oversight of the financial markets. It has strengthened its enforcement mechanisms, improved its risk assessment capabilities, and expanded its regulatory scope. These cases serve as stark reminders of what can go wrong when corporations act recklessly or fraudulently. They underscore the importance of the SEC's mission to protect investors, maintain fair, orderly, and efficient markets, and facilitate capital formation. These cases have shaped the SEC into the robust regulatory body it is today, capable of responding effectively to complex financial challenges. As we reflect on these notable cases, it's clear that the SEC's role in holding corporations accountable and protecting investors is more important than ever. The SEC continues to adapt and evolve in response to the changing financial landscape, striving to ensure that the American financial system remains strong, transparent, and trustworthy. As we look forward, what does the future hold for the SEC? As we stride forward into the 21st century, the landscape of finance is changing rapidly. With this change come new challenges that the Securities and Exchange Commission, or the SEC, must grapple with and overcome. One of the most pressing issues facing the SEC is the rise of cryptocurrency. These digital assets, such as Bitcoin and Ethereum, have exploded in popularity, yet their regulation remains a gray area. The decentralized and global nature of these currencies presents a unique challenge. How does the SEC apply traditional financial regulations to something so inherently non-traditional? This is a question that the SEC will need to answer. Furthermore, the advent of other financial technologies or fintech also poses new hurdles. From robo-advisors to crowdfunding platforms, the way we invest and manage money is changing. As these technologies become more widespread, the SEC will need to ensure that they are being used responsibly and not to the detriment of investors. In the face of these challenges, one of the SEC's greatest assets is its adaptability. The SEC was created in response to a financial crisis, and since then it has continually adapted to the changing financial landscape. Whether it was the rise of mutual funds in the mid-20th century, or the advent of high-frequency trading in recent years, the SEC has shown its ability to evolve and respond to new developments. This adaptability will be crucial in the years to come. The future of finance is uncertain, and the SEC will need to be prepared for whatever comes its way. It will need to continue to adapt, innovate, and ensure that the financial markets remain fair, transparent, and efficient. The world of finance is evolving, and with it, so too must the SEC. It will be a challenging journey, but one that is necessary for the protection of investors and the integrity of our financial system. Whatever the future holds, the SEC will undoubtedly continue to play a vital role in our financial system. We've taken quite a journey through the history of the SEC. From its intriguing genesis as a response to the stock market crash of 1929, the SEC was born out of necessity, an attempt to restore confidence in the American financial markets. It was a bold move, a new agency with a mission to protect investors and ensure the integrity of the securities markets. In the early years, the SEC faced numerous challenges. It had to overcome skepticism, limited resources, and the daunting task of regulating an industry that had previously enjoyed almost unfettered freedom. But the SEC held its ground, establishing rules and regulations that have shaped the financial markets we know today. As we moved through the timeline, we saw the evolution of the SEC. It adapted to changes in the market, expanded its oversight, and refined its enforcement strategies. The SEC has shown resilience and adaptability, always rising to the occasion to safeguard investors and the integrity of the markets. In our exploration of notable cases, we saw the SEC in action, enforcing securities laws and holding violators accountable. These cases demonstrated the SEC's commitment to its mission and its willingness to take on even the most powerful players in the financial industry. Looking ahead, the future of the SEC is bound to be just as dynamic as its past. The agency faces new challenges, from the rise of cryptocurrencies to the increasing complexity of financial products. But if history is any guide, the SEC will continue to evolve and adapt, finding new ways to protect investors and ensure the integrity of our financial markets. The SEC's history is a story of resilience and adaptation, proof to its enduring mission to protect investors, maintain fair markets, and facilitate capital formation. As we've seen, the SEC has played a pivotal role in shaping America's financial landscape. and it will continue to do so in the years to come.